Hi everyone, shout out with another video. Today I'm going to be covering MongoDB, really interesting SaaS company, or more fittingly a database as a service company. Up over 1,000% since October 2017 IPO, even after a recent decline of around 34% from its all-time highs in the midst of the current growth stock sell-off. Now a $24 billion company, anytime a really interesting company like this declines 38%, it's worth looking into and deciding is it fair value. The core of the MongoDB business is NoSQL databases. It has a cloud-based offering, which is the database as a service offering MongoDB Atlas. Very popular amongst developers, uses are endless as databases are so widespread and at the heart of most software apps. MongoDB is a general purpose, scalable and reliable database based on the document model. Net Promoter Score of 84, that is huge here. Really popular amongst developers, really popular amongst customers, very likely to recommend. The core of the business going forward is MongoDB Atlas, its database as a service offering. With Atlas, MongoDB helps customers by managing the underlying systems, operations and infrastructure, allowing customers to focus on their applications instead of the database systems. A novel value proposition in my opinion, focusing on what the customer sees and what the back end and what it doesn't see. Offers a ton of features with this for things like health monitoring, troubleshooting, security purposes, instant deletion of data, separation of environment. Not going to go too in depth on this. The main point is lots of features is a high value proposition. They continue to add to these with strong R&D spending, and it only increases the switching costs if a company has to take other providers' features included in Atlas. If they have to take a company to do this, another software provider to do that, it increases the switching costs to make this undesirable. When a company does a lot of things, it gets high switching costs and therefore moat. Moving on to competitive advantage. This is the competitive advantage in the company's own words, so there's a degree of take it with a grain of salt. It's built by developers for developers, frequently ranks very highly on Stack Overflow surveys in 2017, 18, 19 and 20. More developers wanted to work with MongoDB than any other database, which I think is a tremendous advantage. As I mentioned, Net Promoter Score of 84, again, very likely to recommend. Being a developer's tool of choice is absolutely huge in this industry in my opinion, and this is certainly a competitive advantage. The tech is built with scalability in mind and is infrastructure independent. Huge advantage for small, large customers alike. Small customers can grow with the platform. Of course, as I mentioned earlier, big switching costs are of course a moat here, along with this competitive advantage. The longer you're with the platform, the less likely you are to switch in my opinion if it's working well, and as you build more infrastructure within it, you're less likely to switch just because of the inherent costs that come with changing. Moving on to what we're all here for, which is the growth numbers. Customer numbers continue to grow at an excellent pace, up around a third in the most recent year, nearly doubled in just 2 years, up to now nearly 25,000 customers. Revenue continues to grow at excellent rates at gross margins of 70%. Revenue is now $590 million. Atlas, the cloud-native offering, continues to become a significantly larger part of revenue, clearly cannibalising legacy tech, which is exactly what we want to see. And going forward, this is the highest margin portion of the business. Headcount has doubled in the last 2 years, which again is a really bullish sign in my opinion. The company is building its own infrastructure, sales, R&D at a really nice rate, and is clearly planning for the future and planning for future growth. As with any fast-moving company in the software industry, talent is key, and it's a great sign for companies like this when company culture seems great. 97% approve of the CEO, 4.5 on Glassdoor is a very, very high score, 90% recommend to a friend, 92% positive business outlook, won tons of awards, best place to work and things like that. This is excellent. And we saw recently with Activision Blizzard, company culture can be a real death sentence for a stock and for the growth of a business. So it's really not a problem here, and I'm really impressed with this company's Glassdoor ratings. So that's kind of the high-level investment case. Now let's review the nitty-gritty financials. Cash set of 1.52 is reasonable here. Poor historically that the company is investing for growth, so I see no problem here. Ultimate score of 9.03 indicates the company is not at a risk of financial default. The company is not consistently profitable, so debt to EBITDA is skewed, as are a lot of the valuation metrics. So the main one we're looking at here is price to sales. Price to sales of 28 is expensive, especially in the current environment in my opinion, but it's really the only useful valuation metric we have. In the current environment, I think a price to sales of 21 comes to a high level of risk in the short term. So in summary, I like this company a lot. Total TAM for this business is predicted to be around $80 billion for the global database market. MongoDB sales around $600 million for the year. There's a ton of room to grow. This company has excellent quality, is doing really well. Customers are really happy, developers are really happy. I'm just not so happy with the price sales at the minute. Price sales is very high for the current market environment, even with 70% gross margins at 28. It's declined slightly less than other companies in this space, perhaps due to the company's inherent quality. I think there will be better opportunities for this company, better buying opportunities will arise. 52-week low for the company is around $230. Something close to this would be more acceptable in my opinion for purchasing. For the long-term investor and net buyer, this of course is mostly immaterial. I don't think this company is uninvestable at these prices. In the long term, the company will be significantly bigger, in my opinion, than today's $24 billion market cap. 70% gross margins are excellent, and the company will experience some operating leverage, in my opinion, and this should rise with the introduction of Atlas and the move towards MongoDB Atlas. I love the growth, love the market opportunity. I think this is a thoroughly investable company. I'm just not happy doing this at these prices, but it is on my watch list. If it comes close to $300 or so, I'll be picking this up probably. With that being said, I'd appreciate if you could like and subscribe the video. Thank you.